Hello and welcome to the home buying seminar here at the RL Hotel. I'm Lori Hubbell. I'm with Better Homes and Gardens Real Estate, the Good Life Group here in Omaha. And I know a lot of people who are renting in Omaha decide that they want to be home buyers because it's kind of crazy, our rental prices here in Omaha. Just looking online today, and I saw that as of February of this year, just last month, the average apartment rent within the city of Omaha is $922 a month. You can get a 3-bedroom, 4-bedroom home for that. 1-bedroom apartments in Omaha rent for $784 a month on average, and 2-bedroom apartment rents for $1,022 a month on average. So that's a lot of money. You could buy a house and have a mortgage payment for that or less and get more property than what you're getting from your landlord. The median home price in Omaha is 23% lower than the national average. So it's pretty cheap to live here and own a home. The median rent asked in Omaha is 13% lower than the national average. That's not a lot. When you think 13% on the national average, and that includes New York City, where rents are just astronomical. So rent prices are really high, and I don't know how many people in the audience are renting right now, but you're making your landlords rich. And you guys could be making yourself rich. I'm guessing you're here because you're tired of making your landlord rich and you want to buy a home and invest in your future and build equity, have something to maybe pass on to your kids or another family member. And prices all over the nation are going up. They're not really going down that much. Maybe in some areas they are, but definitely in the Omaha area, we have a shortage of houses right now. There's about 1,800 houses on the market for sale, and a lot of buyers. So the competition is stiff. So that's driving house prices up too, and the market's very competitive. So you kind of have to be ready, and that's one of the reasons I did this seminar, was just to kind of get everybody prepared. So that you know what's out there, you know how to be competitive. The market always fluctuates. Sometimes it's a buyer's market, sometimes it's a seller's market. Right now, it is definitely a seller's market because they know that their houses are selling for over list price with multiple offers. People putting huge earnest deposits down. We have parents that are cashing in 401ks so that they can give their kids cash to buy, which gives them an advantage over someone who's financing. You see a lot right now. But one thing it takes is good credit. If you don't have cash, cash is king, of course, but if you don't have cash, you do have to have good credit, because the better your credit score, the lower your interest rate will be. And it's very important to have a good credit score to be competitive. There used to be, probably 15, 20 years ago, where you could actually buy a house for no money down. And after the housing crisis, the bank crisis of 08 and 09, that's no longer true. Lending is very, very tight. Banks are, afraid of losing money, just as everybody else is. So you really have to have good credit. You can go to places like creditkarma.com and check your credit score for free. You can also go to a lender, and we'll talk about that a little bit more. But they can check your credit score, tell you what interest rate you'll get based on your credit score. And they can, if your credit score isn't good, they can also help you do counseling to get it up to where it needs to be to buy. When you make an offer on a house, there's a term called an earnest deposit, and you will have to provide at least $1,000 with your contract to make it a good solid offer, just to let the buyers know or the sellers know that you're serious. So that check will need to be presented with the contract. It will be held in a trust account with the broker until closing, but that's actually like your first payment that you'll make on your house, because that will be go towards your final purchase price at closing. Down payment, you will have to have a down payment to purchase a home. It depends on the type of financing that you go with. FHA, Federal Housing Association, it's a government-backed mortgage loan. If you have a credit score of 580 or above, the minimum you can put down is 3.5%, which isn't much. That's probably the cheapest way to get into a house. That money can be gifted to you from a family member or a friend with a gift letter, just so they can, trace the money. But that's the best way to get in. If you have a credit score below 580, you can still get an FHA loan, but you'll have to put 10% down, which is a big chunk of change. Credit scores usually run from 300 to 850. 850 is the top, and it's almost impossible to get an 850 credit score. But anything over 600 is considered good. If you're in the 700s, that's very good credit. Shouldn't have any trouble getting mortgages or a good interest rate with 700 and above. It's kind of tricky. Depending on financing, if you go with conventional financing, they have 5%, they have 10%, and 20% down. On any mortgage, if it's FHA or conventional, if you put anything less than 20% down, you're going to have to pay private mortgage insurance. And this protects the lender in case you fall behind and don't make payments on your mortgage. So it's really good to put 20% down if you can. I know a lot of people can't. But if you can, that'll save you a extra monthly payment for that PMI. Closing costs used to be in the buyer's market where you could talk the seller into paying your closing costs. Closing costs will run anywhere from $4,000 to $7,000, maybe higher, just depending on the price of the house and the type of financing that you go with. In the seller's market, sellers aren't too keen to pay those because they know that they may get another offer that's cash or someone else that's willing to pay their own closing costs. So I always tell buyers, don't assume that the seller will pay those for you. It's totally negotiable. The seller can pay all, none, or a portion of your closing costs. But in this market, to be competitive, I tell my buyers, make sure you have that money saved up so that you can pay your own. Talking to a lender, he will kind of guide you into what type of financing is best for you depending on how much debt you have, your job history, your debt to income ratio. So I would say the first step in the process is to talk to a lender and find out how much house you can afford, what your monthly payments will be, and you have to make sure that you're comfortable with your monthly payments. A lender may not know your lifestyle, if you like to go out and eat 2 times a week, or if you like to go to shows or concerts, you want to make sure that you have enough money to do that and not be house poor and spend all of your money on your mortgage payment, because that's no fun. So just talk to a lender and you can kind of work with them and see, what they recommend and what you're comfortable with. Also, when you talk to that lender, you're going to want to get a pre-qualification letter, because when we submit contracts to the buyer, to the seller, we have to present that pre-qualification letter too. That just shows that you've spoken to a lender, you're serious, and that you are creditworthy, that you can get a mortgage. Because if they're taking multiple offers, they're looking at everything. They're looking at type of financing, your offer price, of course, and if you'll be able to close, follow through with the deal and actually go to closing and complete the transaction. So getting that pre-qualification letter is very important, very important. So we have different types of financing that I talked about, the FHA, which is a government-backed program. There's also another government-backed program called VA. If you're a veteran, or if you're active duty, or if you're an unmarried spouse of a veteran who passed away, you can qualify for a VA loan. Again, it's a government-backed loan. The government guarantees the loan. Sometimes you get better interest rates if you go with that type of financing. So that's another thing. If you're a veteran of the armed forces or active duty, talk to your lender about a VA loan. Sometimes they're better than just conventional or FHA. And of course, cash is king. If you can do cash, that's the best way to do it, but I know a lot of people can't. I know we have someone in the audience who is interested in investment properties. If you can get backers for investments, that's the best way to do it. A lot of good investment properties maybe need a lot of work. You can get them cheap, but you're going to have to put a lot of money into them to flip them or make them livable so that you can rent them out to people. And cash is the best way to go because maybe the house needs a lot of repairs. Sometimes the seller is in a tough spot and they can't make repairs. So if you've got a lot of liquid cash, that's probably the best way to buy those investment properties. And again, if you can talk to a lender about that too. Sometimes they have programs that allow you to borrow more than what you would need for your mortgage to make repairs on the property. FHA has a program called 203K that allows you to borrow up to $50,000 over to make repairs. So that's an option as well. Closing costs and escrow. Escrow is basically, it's like a trust account. Once you've made the offer on the property, your contract has been accepted. Things that would go into escrow would be your hazard insurance that you have to shop for and you have to pay for before closing, and that protects the property from fire, flood, any type of destruction like a tree falling on the house. So you have to have that in place before you can close. Usually they escrow 6 to 9 months of hazard insurance, as that's part of your monthly payment. Also taxes, county taxes, depending on what neighborhood you move into, the taxes will vary. You can look that up on DC Assessor. I put that on the sheet that I gave you with the links. DC Assessor will tell you the tax information on the property. Taxes are paid in Douglas County twice a year. If you are making mortgage payments, the best way to pay those is as a part of the payment. 1/12 of your taxes, 1/12 of your hazard insurance, plus your principal and interest would make up your whole complete house payment. That way you're sure that they're paid and you don't have to come up with a big chunk of money twice a year. Also you have in escrow, and these are also part of your closing costs, you have lender fees, you have title fees, you have to pay title insurance, which kind of ensures that the property has clear title that can be transferred to you when you buy the house. Make sure that there's no construction liens on the property or that no one else has a claim to the property, and you can buy the house free and clear and not have to worry about losing the house to someone else who maybe has a right to it before you. So title insurance is very, very important. Title searchers go and they check the title of the house way back to make sure there's no encumbrances on the title, so that protects you. But that's another cost that you have to pay for. You have to pay for an appraisal fee. The bank won't loan on a house that isn't worth what the seller is selling it for. So you have to pay for an appraisal, and that will run $400 to $500, and that has to be paid up front. Also, I would suggest getting a home inspection. It's very important. You want to know what you're getting. You don't want to buy, that house or the movie that came out several years ago called The Money Pit. That can be fact instead of fiction. So there's a lot of good property appraisers and property inspectors out there. The property inspectors will tell you what the house is worth, or the appraisers tell you what the house is worth, and the inspectors will go in, they'll check everything, they'll check the roof, the foundation, the plumbing, the electrical, and just make sure that everything is in good working order. If they find problems, they'll let you know, they'll give you a report. A lot of times the repairs can be negotiated with the seller unless the house is being sold as is, in which case you basically take it on yourself. But if you write your contract based on satisfactory findings of a home inspection, then if there's something major that comes up, like major structural issues or something that's going to be very expensive to fix, a lot of time writing the contract that way will get you out of the contract. So just make sure, whatever realtor that you work with, make sure that they write the offer contingent on satisfactory findings of an inspection. On investment properties, you're usually going to buy those as is, where is. You can have inspections done, but they would be for your information only. The seller probably won't make any repairs, especially if it's a bank foreclosure. The bank usually won't make repairs, so, but it's still worth getting the inspection done, paying the $350 or $400 for a thorough inspection, just to know what you're getting and how much money you're going to have to put into the house. So once you go through all the negotiations, and the house goes through escrow, it usually takes 30 to 45 days to get through all the inspections, the title search, everything to get the property ready to close. A lot of times FHA and VA take a little bit longer. Those could be 45 to 60 days. Usually conventional closing would take about 30 days, and you can do cash transactions usually in just a few weeks. But during this time, everybody's working behind the scenes to make sure that you can close on time and take possession of the property. So once you get to closing, you'll be there with your lender and the title people. You'll have to sign a lot of papers. You'll have to sign papers for the title, and then you'll have to sign papers with the lender. So it usually takes about an hour, and you'll think that your hand's going to fall off by signing all these documents, but it's worth it to get your own home. So that's when you'll get the keys, and then the house will be officially yours. Usually there's a month period between closing and when you have to make your first house payment, but they'll go through all that. Your lender and the title company will go through all that with you. I've got a quote here by Suze Orman. Maybe a lot of people know who she is, maybe you don't, but she started out as a real estate agent. I think she's on Shark Tank now, that show Shark Tank, but she's made millions of dollars in real estate, investing in real estate. She's a real success story, and she's written several books that are very inspirational about investing in property and owning property, but her quote says, "Owning a home is a keystone to wealth." And it really is. I mean, if you think about how much money you're paying to your landlord, all that money could be going into an equity account. Your principal will go into equity, and that'll really help you build wealth. Property's going up. When we went to real estate school, we were told that Land never depreciates in value because there's only so much of it. So, the improvements on the land, the home can fall into disrepair, but that land that it's sitting on is still very valuable. So if you can have that little piece of paradise for yourself, it's definitely worth having. You want an acre, 2 acres? So I just want to reiterate, buying a home in today's market requires good credit. So if you don't have a good credit score, that's something that you definitely want to start working on. There are different avenues. There are credit counselors. It's tricky. It's not easy. You can think you're doing a good thing by paying off your debt really fast, but then they'll say, well, you paid off this stuff too fast and too easily. There might be something like a red flag there that would come up on your credit report. So it's very tricky to get it just perfect. But, making payments on time, not having late payments, not missing payments, obviously this is probably like common sense, but just not having a lot of debt for what you make, living sensibly. Again, your lender can help you. He can tell you where you need to improve if you have to, and then you can work on that. And they can keep checking your credit every 30 days or so, making sure that you're on the right track and directing you, to where you need to go. My lender was going to go into that a little bit more, but he unfortunately couldn't make it today, so you're stuck with me. But yeah, it requires good credit, and then of course saving up money for that down payment, saving up money for your closing costs in case you have to pay those on your own, which, in this market, I would say plan on it. And the more down payment you have, the better. If you can get that 20%, that'll save you a lot of money over the course of your loan by not having to pay the private mortgage insurance that protects the bank. So that's a good thing. If you can work towards that, that's definitely the way to do it. Definitely. So that's kind of what I have to say. Does anybody have questions out there? Common mistakes that people make on their credit, or yeah, mistakes happening while you're looking for your dream home in purchase. When you think you're purchasing your dream home, and it turns out to be your nightmare home. You just want to make sure that you don't take on more than you could handle. Obviously, if you have a problem with your plumbing now, or if a tree falls and punctures your roof, you call your landlord and they fix it, or at least hopefully they would fix it. When you buy your own home, yeah, it's not all lilacs and roses. I mean, you have to have the money, first of all, to make the repairs, or you have to know how to make the repairs yourself. I know a few of you out there are pretty savvy with construction and home repairs, and you can probably do it yourself. But for some of us, I call it the privileged finger. You have to be able just to, dial on your phone and call somebody who can come fix it. And that costs money. Plumbers are $45 to $75 an hour, and you never know, they get in there and they find some major problem that's going to cost you thousands of dollars. So in addition to making your monthly payment, you have to kind of have a savings account for that nightmare that's going to cost you a lot of money for your dream home. Again, taking a portion of your income and just putting it into a savings account for that specific problem will save you a lot of headaches later on. A new furnace, a new air conditioning unit will cost you $4,000 to $7,000. Again, when it's your house, you can't call the landlord and say, hey, my furnace doesn't work, come fix it. It's up to you. You can buy home warranties. They usually run you can buy a year at a time. They're usually about $500. There are a lot of home warranty companies around town that are good, some that aren't so good. But you call them, and they usually come out for a service charge that's about $70 to $80. They look at the appliance, and if they can't repair it, then they'll replace it. That's usually their policy. So that covers, your furnace, your air conditioner, your washer, your dryer, refrigerator, basically all the appliances inside the home. Sometimes some different companies, and if you choose a different policy, sometimes they'll cover the electrical. It just depends on the policy and the company that you're working with. But those are a good investment for $500, just to have that peace of mind to know that you're covered. And of course, the homeowner's insurance, that'll cover the bulk of, a new roof that's $12,000, $10,000, just depending on the size of the house. You'll have a deductible, usually $1,000 to $1,500. You have to pay that deductible up front, and then they'll cover the rest. But again, that's money you have to have in reserve. So, did I answer your question, or was that?
I would agree. Could you also address the whole thing I will say about location? If you have a dream house in that location, or a fantastic location of that house, how would you say you should proceed? You want the house no matter what, but what are locations and how do they affect the house and the value of your house in the potential future?
Okay, the question was location and your dream house. Location. You've all heard that. It's very important. 3 things sell a house: condition, location, and condition. If you're not going to live in the house for the rest of your life, you need to think about resale. There are a lot of great neighborhoods in Omaha. A lot of the older neighborhoods are seeing a resurgence now, but there were some that a few years ago weren't so great, but they have fantastic houses. So you kind of have to make that decision if you're going to buy house or location. The reason why there's a shortage on of houses on the market right now is because a lot of people are choosing to stay in their homes, and they're adding on or they're making improvements because they like the location or they like the home. They know they're going to stay there. And, if it's a home in a neighborhood that is full of $100,000 houses, and they put $300,000 into it and totally improve their house, obviously when they go to sell, they're probably not going to get that money back. But they've made the decision that they want to stay, they like it, and they're just going to, enjoy the improvements that they've made and not worry about resale. Fortunately, a lot of the older neighborhoods that were considered bad or sketchy a few years ago are seeing a resurgence. People are moving in, fixing up the homes, which is bringing up the property values and the worth in those neighborhoods, which is great to see. So I think Omaha overall is really making a comeback in the housing market, and of course prices are going up because of that. Yes?
I'm going to take off real quick, but I had a question. So 2 questions. The DC assessor, is that for Douglas County?
Douglas County, yes.
So if you were outside of Douglas County, is there a resource for that?
Yes, if you're outside of Douglas County, Sarpy County Register of Deeds is online. Cass County is online as well.
So just search for something that's for that particular county in the assessor for that?
Yeah. Right, yeah, like Cass County Assessor, Dodge County Assessor. Most of them are online.
Okay.
Some of the larger counties around Omaha are online.
Okay, and then in regards to that, you said for the escrow and the taxes, like figure in its bulk of that, what else was that upfront cost that you said the escrow, the taxes, and then was there anything else that you should kind of just factor into your year?
Yeah, all the components of a mortgage payment. The question was escrowing for taxes and insurance. You have what they call PITI, that's principal and interest, taxes and insurance. Those are the 4 components that make up your monthly mortgage payment. Your principal is what you're paying actually on the house. The interest is the interest that you're paying on the money that the bank has lent you to buy a house. And then county taxes, you pay 1/12 of the yearly county taxes on that payment. And then your insurance, your hazard insurance will probably cost you, depending on the size and type of the house and the age of the house, replacement cost. That policy will cost probably anywhere from $900 to $1,500 a year. So you'll pay 1/12 of that out of your escrow as well. And escrow, everything is paid in advance, so you're putting money into that escrow account for the next year for your taxes and insurance. Thank you for coming. Yeah, thank you for coming. Any other questions? Yes? The question was, is it buyer's or seller's market right now? Is it definitely a seller's market? A big, big seller's market. Yeah, people are just, you'll list your home for $150,000 and you'll get offers for $155,000, $158,000. Again, depending on the location. If it's a good location, if it's a popular location, if the house is in good condition, and it has the amenities that people want. Most people want, 3 to 4 bedrooms, at least one garage. Then you're going to get over asking price. I saw one house that went for $16,000 over asking price, just because it was in a fantastic location. It was a cute house, and it had what people wanted, and people were waiting in line, the day that it went on the market. Houses are selling within hours of hitting the market right now. Within hours. I mean, you really have to be ready. If you want to buy in this market, you have to be ready.
So it hasn't been affected at all by the president?
No.
Right now, it's still okay to buy a house?
Yeah, the real estate market hasn't been affected by this current administration in Washington at all. In fact, the stock market is going up, which is driving interest rates up. I mean, the end of last year, you were seeing rates 2.75%, 2.5% on 15-year mortgages with good credit, and now they're going back up to like 4.5%, which is still fantastic. I mean, 20 years ago, when I bought my first house in 1991, I was paying almost 15% interest. So they're still at historic low rates. So yeah, it's a great time to buy. I wouldn't worry about buying. Not at all. Yeah. Any other questions?
When it comes to lenders, are they all pretty much the same, or are there variations that you're looking for when you come to choose a lender?
Good question. The question was shopping for a lender. Lenders do vary. I mean, you have the prime rate, which is the prime interest rate set by the feds. But lenders do have slightly different rates. I suggest shopping around for maybe 3 different rates. Credit unions offer good deals. Private lenders, you've got online lenders like Quicken Loans. There's Rocket Mortgage that's through Quicken Loans. I would definitely shop around because you might be surprised what kind of rate that you can get. My husband and I just refinanced. We actually refinanced twice last year. The first time was with U.S. Bank for 4.5%, which we thought was fantastic. And then I saw rates dropping, and we refinanced in November, actually through our insurance company. State Farm Insurance has a bank. We went through State Farm Bank and got 2.75%, which was fantastic. So it's almost like free money. Yeah. So it's still a good time to buy. Get in before the interest rates go up. Typically, when the stock market goes up, so do the interest rates. That shows a strong economy.
Did you say that's national, or is that just local?
Definitely national. It's across the board. The federal bank, sets the prime interest rate, and it kind of goes up from there. Any other questions?
What about land and prices on land?
Yeah, land prices are going up as well. Definitely, because there's more and more of a demand. A lot of people now are wanting to get back into rural properties. You know, they don't want to live in a city. They want to live kind of out in the country. So buildable land is going up in price. It's still a lot cheaper than workable land, like agricultural land is very, very high. But, you know, if you wanted to buy a couple acres and buy a home on it, like some of the neighborhoods here, like Fort Calhoun, Ponca Hills, yeah, you're looking about $50,000 an acre just for the land.
Are you seeing prices cheaper in Iowa for that type of for workable land?
In Iowa?
Yeah, are you seeing cheaper prices over there versus Nebraska?
No, I'd say prices in Iowa for workable land are still comparable to Nebraska. Of course, there's more of it over there. It's more of an agricultural state than Nebraska is. I would say prices for workable land in Iowa are probably a little bit higher than Nebraska. Yeah. I think properties in Iowa, by and large, are a little bit pricier than Nebraska anyway. Well, they've got a different tax structure. Sometimes it's a little cheaper to live there than here. Like if you're a veteran, they have a different tax structure on your retirement income and things like that. So it's a little more desirable to live there, so there's more of a demand for properties. Any other questions? Nope. Well, if there's no other questions, I want to thank you all for coming out. Hopefully I've enlightened you on how to buy a house, and you've got my information on the cards and the handouts. If you have any other questions, please just give me a call, and I'd love to discuss maybe more individualized with you. And I just want to say good luck in your search, and it's a great time to buy.